So, liquidity is basically about what the market entails, right? So we have liquidity. Pardon my this thing, sometimes this thing, So so it's actually about what the market entails. It's the whole of the market. So simply put, liquidity is money. Let me take this out. Liquidity is what? Is money. I'm going to be using, let me use the text format. So liquidity is money. So basically, what we are looking for as traders is money, right? And our goal is to make money in the market. So liquidity, simply put, in a layman language, I won't like to complicate it, it's actually money. So, and we'll be looking at 3 types of liquidity, and we'll also be looking at how you can spot it on the chart. All right. And then we'll look at the usage and all the just basic liquidity. And what I've done is to simplify it. I've been studying liquidity for some time, but recently I met a guy that actually understands what liquidity is. Even though after I took the course, I also have simplified it also in my own format, so I can easily understand it. All right. So the first type of liquidity that we're going to be looking at is known as transactional liquidity. Okay, this is the first one, transactional liquidity. Then the second one is known as structural liquidity. And the last one is known as inducement liquidity. So we'll be looking at how does this, as a trader, how do you make use of this? Because there's no point talking about this if you cannot make use of it, right? So if you remember, how many people attended, I've seen my video, or you attended that webinar we had on basic market structure? You can drop, I want to know the number of people, how many people, attended that meeting. We have I think it's about 3-4 weeks ago, where we talk about basic markets. Okay, firms. All right, good. And you've seen the video. We did, I think it was two different topic on price action and basic market structure. If you have not seen that video, I want you to drop a message in the Telegram group. Maybe I'll drop the link, the YouTube link, so that you can watch it. So basically, in the basic market structure, we said that what we said was, what you're looking for, you are looking for what price would do before you start taking positions. Number one, we say if market is bullish, right? What we normally have is we have market will take out this low, all right, that we call a sweep of the previous low, and then you have a break of structure. And then what you have next is that then you now have market will now come and create another low. If you remember, then we have another break of structure. So now we said this low that swept this previous low, all right, this low. So this is the previous low, and there's another low that swept this previous low, becomes our protected low. How many people remember, that if you remember that video, you remember that we have protected low, protected high, and this protected low always happen during bullish structure. All right, so this become our protected low. Let me remove this. So this become our protected low, and we now say that from this place to this place become our what is now our swing structure. Okay, if you remember, so we say this become our protected low, and from year to year become our swing structure. And then we say, as a trader, what you are now looking for, you are now anticipating what price you do. All right. In your anticipation, you are looking for opportunity to to take your buy position at a discount zone. So we have our Fibonacci 2. So we expect price to come to our discount zone. don't forget that immediately after a break of structure, we expect price to do what? To travel down. Price will do this. 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 And travel down into this zone. All right. We expect price to travel down into this zone before we now have what? Price moving to the upside. Okay. If you remember in the basic market structure. All right. So now as a trader, remember if you remember that webinar where I said that normally there are two types of traders. There are those that call themselves breakout traders, and I don't say their concept doesn't work, but more often than not, if you are the type of trader that trades breakout, you will be if you are not careful, most times you'll be having price eating your stop loss. That means price after price must have broke structure, and you set your trade like this. Most times, this is what most of them will do. I'm talking about breakout traders. They will set their trade positions like this, right? And the price breaks out from here and comes back and eat their stop loss. Is it that they are wrong? No, it's not. They are not wrong. Eventually, the price will not continue in that direction, right? The difference between someone that understands market structure and a breakout trader is that the person that understands market structure expects price to pull back. And don't forget that during our basic market structure, I said that if price doesn't come to you, the price broke out from a range and it continues to the upside and doesn't come back to you, you let it go. There will be another opportunity, right? So those are one of the criteria. Now, coming back to liquidity. Coming back to liquidity, I'm gonna draw that again, and then we'll now start. Like I said, we'll start with the first one known as transactional liquidity. So what market will do first? When we have a break of structure, right? First of all, I think this thing is so we have market do this. Market will do this break structure and then create a sweep of the previous low. The first thing is we have a sweep of the previous low, and then we break structure. So at this point, pardon me, this place now becomes our transactional liquidity, where market has broken structure. So this spot becomes our transactional liquidity. All right, don't forget that we now said that this is our what? Our protected low. Pardon me. So this becomes our transactional liquidity, where market have broken structure, BOS, or our transactional liquidity. So now we are anticipating for price to do this, to come back here before price continues to the upside. Okay. So so that is transactional liquidity. I want to show you. I think there's some places. Give me 1 minute on the chart. On the chart, you begin to see. Don't worry, I'm still going to put everything together. So, for example, we have what GU did there. GU broke structure from here. First, we have a strip of a low. This is the present price that GU is doing. If you can see, okay, let me expand it. So we have price do this. Price swept this initial low, right? Price came down, swept this low, and then broke structure to this side, right? And then price is doing this. Price is coming down before we continue the uptrend. Let me show you an example, another example. Now, the way I've actually simplified this is to stay on the higher time frame, on the daily time frame and the weekly time frame. And I'm going to tell you why. I've seen that because I've seen different liquidity costs. The mistake a lot of people do with the ability to identify this liquidity point is that they go to the lower time frame, and on the lower time frame, say on the 1 hour, on the 30 minutes, on the 15 minutes, it can be very deceptive. It can be very, very deceptive. Now look at this. This was, I think this was in October 2023. We had price came all the way from here, created a sweep, and then took out this liquidity, this I broke structure from here. Now created and traveled down in, as you can see. So it transacted back. So that's why they call it transactional liquidity. Price will pull back. Price will pull back. So that's all about transactional liquidity. Now the second one, which is the most important liquidity as a trader that you must understand. And please, if this is your first time of learning about liquidity, what I'm teaching tonight is not something that that you understand after this course. It's something that you need to watch this video over and over. I mean, I've seen so many videos. I bought 1 or 2 courses on just liquidity alone. And as we move on, you understand why liquidity is very important in the market, because liquidity is what institutional trader focus on. And that's why you hear a lot of time they will say, broker, that the broker manipulated price. They don't manipulate. It's you. It's the trader that does not understand, number one, liquidity, and does not understand what liquidity is, and does not understand what basic market structure is. If you don't understand any of those two, you will not. You'll be thinking it's manipulation, but no. And that's why most times you see that price. Look at what GU did about 2 weeks ago. If you had placed your entry here, let's say you have your entry here. Let's say you have your entry here. Let's say you have your entry here. You're expecting price to turn at this spot. Price would have taken your stop loss, right? But eventually, look at what pounds did. Pounds broke structure and eventually now came down. So a lot of traders, we used to call this place stop loss ons. They say, and it's true, because institutional traders know that a lot of retail traders like you and I would have placed sell here, and the price will now do this and take you out. Price will come here, go up another like 100 pips, hit your stop loss and come out. So I'll be explaining when we get to transactional liquidity and inducement liquidity now. Sorry, I've explained transaction. When we get to structural liquidity, you will now understand how to play this game around these zones. So basically, what will happen is so now we'll move over to the second one, known as what? Known as structural liquidity. Just come along with me. All right, structural liquidity is also known as the last low, the low before the last low. The last low. Give me 1 minute. This, I'm looking for my. T. The last low before the main low, or the last high. The last high or the main high. So this is your structural liquidity, and we are going to be identifying in the chart. But before we do so, let me explain it. So price do this. Don't forget, price will first of all will create what? A sweep of the previous low. We have a sweep of the previous, a break of structure. And then price comes down, transact. Then we have our transactional liquidity. Price will now transact and create structural liquidity. So we identify these as our what? These are our sweep of the previous low, this previous low. And this low that you have here becomes our what? Structural liquidity. This becomes your structural liquidity. Please, if you're following me, let me know. So normal traders, if you understand liquidity, once you spot your structural liquidity, you expect price to do this, to come back and take out the structural liquidity. So price will do this, take out structural liquidity, and then continue to the upside. So we say structural liquidity is used for continuation of the trend. Please, if you are following me, let me know. If you want me to explain this all over again, let me know. Let me go over it all over so that you guys understand. You can drop a chat in the chat box if you want me to go over that all over again. If you want me to go all over that again, let me know. Okay, somebody said he's not hearing me. Yeah. Okay, I'll go over it. Okay. Somebody's asking for, I'll be taking the question, but as you move on, don't worry. If you have any question, let me know. Okay, I'm going to go over structural liquidity is the most important liquidity. If you understand structural liquidity, you'll be printing money in this market. I'm going to there's a trade I dropped in the group like 3 weeks ago on Euro AUD. I'm going to show you that trade. I did 300 plus of pips on that trade before I came on. Although it went higher to over 600 pips. I think I've dropped like 2-3, but I couldn't label it because I've not explained it to you guys on the group. So basically, we say structural liquidity, you can spot it, is the last low before the main low for a bullish structure. For a bearish structure, is the last high before the main high. So price will always do this. Price will always do this. Price will always do this. A sweep of the previous low, a break of structure, right? And we'll come back to create structural liquidity. And then we continue the trend. So, and we say structural liquidity is used for continuation. All right. So, sweep. This is our sweep. This right here becomes our structural liquidity. Okay. So this becomes our structural liquidity. Then you expect price to do this. Once you identify your structural liquidity, you expect price to do this, to take out your structural liquidity to the upside. Don't forget, this low is protected. You will never have a structural liquidity if this low is not protected. So institutional traders already know that. So they allow price to come here to come and take out this low. Now let's look at that. This is for a bullish structure. All right, for a bearish structure, you have, first of all, don't forget you have this. Your price do this. Okay, and then your price now do this. Take away this I sweep. Price will create a sweep and then break structure and then do this. Create a structural liquidity and then price will do this. Okay, so you already know that this is your sweep. This is your sweep of the previous high. This is in a bearish structure. This becomes your structural liquidity. So what do you expect price to do after you have identified your structural liquidity? You expect price to do this, to now transact back, take out the structural liquidity and continue to the downside. Let's see an example for bullish structure. This example that we identify on GU. So what we have is, first of all, we have a sweep. This is a sweep. Price, pardon me, price did this, swept this low, broke structure, came down and create structural liquidity. All right. And the price did this, took out the structural liquidity, and then we have continuation on this trend. So so this is what you have. You have this. You have a sweep of this previous low. we now have structural, this becomes, that's not our structural liquidity. This now become our structural liquidity, which is the last low before the main low. This is the main low, this is the last low. So price will take it out. I'm going to share an example. I think there was one trade that I dropped in the group. Let me go and look for that trade. Give me 1 minute. I don't know why this thing is hanging. Guys, if you can still see my screen, let me know. You can see my screen, let me know, and you can hear me. So I hope you guys understand that explanation again, because I have to go over it again for those that don't get it. All right, so okay, so let's look at another chart example. I think I dropped for EA for Euro AUD, and I'm going to show you this trade that I dropped in the group. This particular trade. So what we have is this particular trade on this weekly time frame. I spotted this on the weekly time frame. But if you also scale down to the daily time frame, you will see it even on the 4-hour time frame. But I like to spot my own on a higher time frame. Let me go back to the weekly time frame. Then we'll come back to the daily time frame. So we have price. Price did this. Price came down, did a sweep of this previous low, went all the way, created structural liquidity. Okay. And then came down, took out that structural liquidity, and then we continued the upside. So I posted this actually posted this on the Telegram group. Let me go look for it. This was can you see, if you can see my Telegram, what I posted on the Telegram, let me know. I think this was on July 14th, this particular trade, Euro AUD. Guys, can you see my Telegram? Okay, thank you, Richard. So I added, and then if you notice what I wrote, Euro AUD is sitting pretty on the support around 1.6 after a massive sell for several weeks. It looks like it's time to push up from where we are sitting for around 250 pips. I was envisaging 250 pips from here, but Euro AUD actually right now I've done over 600 pips. If you go check it. If you remember this trade on the Telegram channel where I dropped it, I think this was actually on the 14th. I think this was actually on July 14. Yes, it was on July 14 where I posted this. So if you understand liquidity, if it's going to help you, and if you look at from where I think we are around 1.6, let me go back to that Telegram group, that Telegram channel. Okay, I said we are sitting around 1.6, yes, 1.60. So price actually was sitting here at 1.6 at the time, and from 1.6 to around 1.65. So we done over about 600 pips from here. I took this trade and I wrote this trade up to around 250 pips before I jumped out. So, but the following week, we had this massive uptrend. There's another trade that is building up now that I'm in this trade. I'm in this trade presently. If you understand liquidity, trading will be like a piece of cake. Now, look at what Euro AUD, pounds AUD is doing. We have at first, what we have was, we have a sweep. Price came down and created a sweep of this previous low. Took out this high, came down all the way, created another sweep. All right. This particular one didn't really create any structural liquidity. But now we now have creation of structural liquidity around here. That was why price took off. Right? This is for the bullish structure. Now for the bearish structure, price is also building up a structural liquidity. Don't forget we said our structural liquidity is a last low before the main low, or the last high before the main high. The last low before the main low for bullish structure, right? And the last high before the main high for bearish structure. So we are having price already. We have a structural liquidity here. That price are built up on this time frame, on the daily time frame. So we have what looks like this. Price created a sweep of this structural liquidity. So now we expect price to do this and then travel to the downside. All right. So if I go to if you can see I'm already holding this trade. If you can see my chart, my MT4, I'm already in this trade. I've been in this trade since last week. Now, the advantage of looking for all these structures of liquidity on a higher time frame is that it's more consistent. It's actually more consistent. I know people trade liquidity on the lower time frame, but you'll be having a lot of your stop losses will be getting a lot. So if you understand that, let me know if you get what I've been saying about structural liquidity so far. Maybe I'll put, if you have any question. So like I said, liquidity is all you need to know. And the question is, why do price always move the way it does, like this way? Price is always doing this, like, and you are confused. Okay, thank you, Richard. The reason is not far-fetched. It's because like I said, liquidity is about money, is money. And the reason is not far-fetched is because traders are always looking for where money is, where the money is. Traders are always looking for what? Where the money is. So we're always looking for, and institutional traders especially. So what you have right now is that the way on GBP AUD, the way price is moving right now, price has created a vacuum, and the vacuum is around this area. All right. So more often than not, you always expect price to fill up this area before it continues the uptrend. So in filling up this area as a bullish structure, because GBP AUD is actually a bullish instrument. If you can look at it from, I mean, we've been bullish since this was since 2022. So it's been on the uptrend. So what you expect price to always do is to come back, create a new low, continue to the upside, create this low, and continue the upside again. So you expect price to do this again before it continues to the upside. All right. So having said that, we're going to be looking at two types of structural liquidity. It's not something that is hard. Like I said, the structural liquidity is about the most important part of all liquidity, apart from it's just about the most important part of all liquidity. So okay, let me go to GBP. Give me 1 minute. Give me 1 minute, guys. Okay, on GBP AUD, let me clear this. Too many drawings. So there are different types of structures you will see in the chart, and then you actually need to pay attention to charts before you can identify them. It requires a lot of screen time. Like I always say, I can spot all these things by just looking at the chart, but I can tell you for free, I didn't come about just spotting them the way it is until after looking at the chart for so long. If you look at, if you right now I'm using glasses because my eyes are going bad because of focusing on the screen for so long. I don't sit as much as I do on the screen like I used to. But before now, to understand how market moves, you need to constantly, especially if you are just trading, you need to consistently have to study and do a lot of back testing, checking your screen. Now, there are two types of structure that you will notice in the market for an uptrend and for a downtrend. Now, for structural liquidity, the first thing you will notice that price will do this: create a sweep, break structure. This is type 1. Break structure, create structural liquidity, and then continue the trend, and then takes out the structural liquidity before that continuation. Don't forget that we say structural liquidity is used for continuation. All right. So we have a sweep. We have our structural liquidity here. This becomes our structural liquidity. So this is the first type. This is the first type that you will see. And we've identified one in the market here. There's one here. Okay. There's another one for GU. Okay, there's another one here. All right, we have price. Do this. Take out this low. Price took out this low. This is price. So price created a sweep. We have a break of structure. Price now came down to create what? Structural liquidity. Went all the way up, and it actually created another sweep. Okay. Before moving to the upside. Now I'm going to be explaining this type. I'm going to come back to explain this type. But there's another one I'm looking for. You always see it. Give me 1 minute. So like I said, it requires a lot of study. A lot. It requires a lot of study. Okay. I don't know what is wrong with my this thing is slow today. Give me a minute. Let me remove this one. Oh, come on. Okay, so we have price came, create a sweep, created what? Structural liquidity around there. Although this one didn't take out the structural liquidity, but then it went on the outside. So if you already know that you are anticipating, what the knowledge of liquidity does for you, that it helps you to anticipate what price will do. All right. So that's the first one. So the second one, this is the first type of structural liquidity. This is the first type. Price do this, create a sweep, break structure, come down, create structural liquidity, go up, and then you expect price to take this up and then continue to the upside. All right, this is the first type. This become our sweep. This become our structural liquidity. Don't worry, Amos, I'll answer your question. Don't worry, I'll answer your question. We are going to come to that. So the second one is the second type of structure that you will notice in the market is that price will do this. All right. Create a sweep, do this, and then take out break structure. So from here to here now become our sweep. So here become our structural liquidity. So this spot right here, where market broke out structure, becomes our transactional liquidity. So at this point, if you notice that this type 2, So at this point, you expect price to do this, to come and take out this structural liquidity and continue to the upside. And continue. Now, a lot of if you heard about this, they used to call it choke. A lot of those that trade, I think it's ICP traders. How many people have heard about the ICP traders? So a lot of traders will say immediately after the break of structure, you should take your trade around there, and they will set their stop loss like this. They'll do this. Then as we post to give me 1 minute. This thing has refused to. Okay. So they'll say their entry like this. The entry will be like this. The entry will be like this. So price will take them out. Price will come and take them out. If they are stop loss. But if you understand liquidity, structural liquidity, you know you want to, first of all, you want to get your Fibonacci 2 and do this. So you know your entry will be around this area. Right? So you are waiting for price to come to you. You are waiting for, that is what this is exactly what GU. I posted this last week. Is it last 2 weeks? For pounds, where I said pounds is going to sell. I took that trade. And last week when we had a live session, I was talking about this trade. I was in this trade. I think I did about but because there was no so much liquidity, nothing was moving market last week. I think I just did about 60 pips thereabout. So if you notice what price is doing here. So don't forget, we say the last eye before the main eye. This eye, you can't say this is the last eye before the main eye, because this eye didn't create any sweep. This is the one that created a sweep. If you pay attention, you see what I'm saying. This one right here is the one that created a sweep of this previous eye. So this become our last eye. So now we have another, this last eye before the main eye now becomes our structural liquidity. So I actually took this trade. If how many people was in the group? I posted this this setup. I actually took this trade, this GU trade, and I mentioned it in the group. Maybe I'll go and look for it in the Telegram group. So price did this, created a sweep, becomes, so this spot become the last eye before the main eye. So you expect price to do this. As you can see, price is breaking down into this zone. So we have price will come down to this zone before we continue the uptrend. So this is what GU is printing. If we go to, let's check AUD USD as well. Exactly what AUD did. Exactly what AUD did. And it came down for this bearish structure. Now, I'm expecting if price comes to this area, I'll be waiting for AUD to come to this zone. This zone right about here. So this is how price transacts around liquidity. Now, for the last one, which is known as inducement liquidity. Inducement liquidity is about maybe we'll talk about that in the next class. I don't want to boggle a lot of people with, but just know that this is the most important structural liquidity is the most important liquidity when it comes to three types of liquidity. Okay, for inducement liquidity, let me just talk about it. But maybe next class, sometime during the week, when I'll be having Forex for You regional manager for Africa, we're having him in the webinar like this. I'll be talking about inducement, but let me quickly explain what inducement liquidity is. Inducement liquidity happens when there is no structural liquidity. So you have something that looks like this. Price comes down. Okay. We have a sweep of the previous low, a break of structure. So from year to year becomes our swing structure. This becomes our swing structure. This becomes our swing structure. All right. So now you expect price to do this. So normally you expect price to do this. Price will do this. Price will transact. Price will transact and will come into this zone and then create structural liquidity and then move to the upside. This is normally what you expect. All right. But in this case, for inducement liquidity, there you will not find any structural liquidity here. So this is what price will do. Price will come and take out this low. This is our previous low. This is our sweep. And then continue the trend to the upside. So we say inducement is for expansion. So it will expand. It will take out this low and then expand to the upside. So now this now become our new sweep of this previous low. That was what we have here on pounds. Let me go to for pounds. So, but I'll be spending more time on inducement liquidity next maybe next class. Don't let me. But for now, I'll be taking some questions. If you have any questions that you need me to clarify. Where's that? Where's that trade? Okay. So you will notice that this trade, we have a sweep, but there's no market did not create any structural liquidity right about here. There's no structural liquidity here. There's no structural liquidity. None. No structural liquidity. So what we have is price did this, created a sweep, went up, and took out this low. It took out this low and then continued to the upside. So it expand. It expand. So that's inducement. I'll be throwing more light on inducement next class. Then also, I'll be talking about the do's and don'ts of structural liquidity. It's very simple. Just require a lot of paying attention to the market. So I don't know if you have any question. Okay, Amos said, is there a pattern, say a candle pattern that helps to confirm any type of, okay. Basically for structural liquidity, for a bullish pattern, for a bullish structure, you must have that's the type of the do's and don'ts that I said I'll be explaining. You must have the number one is you must have price. Your structural liquidity must be very close to where the money is. For example, if you look at what pounds is doing at this spot, we already have price do this, and price has created structural liquidity here already. It has created structural liquidity. So you should be expecting price to transact all the way to this area at the end of the day. Sometimes it can take a long time because I'm on the daily time frame. It can actually take a long time, some couple of maybe 2-3 weeks before you see price transact to this side and then take out this low. All right. So it must be close to this structure. That's the number one. Then number two, you must have a V shape for a bullish structure. You must have something that looks like a V shape. As you can see, this is a V shape for a bullish structure. Now, for a bearish structure, you must have an A shape, like we have here. This is A shape. For this one, you must have a V shape. That's for bullish structure. The structural liquidity must be V shape. So you must have a shape for a bearish structure. And another thing, lastly, for structural liquidity, is that your this thing must be your fib, your retracement, this transactional liquidity, after you have identified your swing structure for this move from year to year, your swing structure, it must be sitting inside the 50% retracement, Fibonacci retracement level. As you can see, this structural liquidity is sitting inside this 50%. It must be seen on the 50, on either on the Fibonacci or inside the 50% retracement before you continue that trend. Yes, firms, yes. Do we use the Fibonacci from the transactional liquidity point? Yes, to check in. Yes, yes. And like I said, okay. Frankly, me, I stay with daily time frame and weekly time frame. Trust me, it might take a while before you have those trades, though. But if you ask me, it's safer. For this Euro AUD that I dropped in this one, this Euro AUD group trade, if you know how many weeks I waited for this trade, this trade on this weekly time frame, and I was glad I waited for it because I did over 300 pips. But this trade I dropped on this Telegram group, this particular one, this one that I said we should be expecting around 250 pips. Actually waited for this trade for about 5 weeks. I was waiting, and because I already spotted this structural liquidity around. Now this is the structural liquidity. If I give me a minute, let's replay this thing. Maybe if we do, you guys will understand what I'm saying. All right. This is the one I dropped on the group like 3 weeks ago. This particular one. And don't forget, this is on the weekly time frame. So we already have a last low that made a sweep, a break of structure, because I already identified that we had a sweep of this previous low. We had a break of structure, and the price came here and created structural liquidity. So I was already anticipating that price will come here, this area, and then continue to the upside. But it took a long way though. This one actually took a long way. I think almost 5 weeks. Why I was playing with other, but I had my eyes here. I was waiting. So let's see what price did. Okay, let's see what price did. You see, guys, who was asking that question? Amos. So if somebody was asking this question, so you can see that price took out the structural liquidity. So this becomes our structural liquidity on the higher time frame. Because I've tested this on the lower time frame. On the 4-hour time frame, I used to try it on the 4-hour time frame too. But I noticed that sometimes you have fake out. You will not see it properly. On the daily time frame and on the weekly time frame, you will see it properly. You will see it. You will definitely see it. So I already spotted it. So, and that's why a lot of times you'll be wondering why the price turn here. There must be a reason why price always turn, and price didn't come here. Why did it turn here? Why did price do this? Created this, do this, and then came here to turn. Why did it turn at this low? Why? because we are still within the swing trade, swing structure, pardon me, or you can call it swing trade if you want. So because this is still our swing structure, this is our swing structure. So this swing have not been taken out yet. Is our swing structure, right? This is our swing structure. So our attention for this bullish move is that we are waiting for price to come back here. Because from year to year is our swing structure. If I put the Fibonacci 2 here, you will notice that from year to year is our swing structure. Can you see? And then you notice what I said, that price must, number one, price must create a V, your structural liquidity must be V-shaped. So this is our structural liquidity. It must be V-shaped. It must come down and create V-shape. And you can see that you have series of candles. It must be V-shape. And then create, and because it's V-shape, price came back and took out this low and continued to the upside. It continues to the upside. And then another thing I said, apart from creating a V-shape, I said your structural liquidity must be either on the 50% Fibonacci retracement level or inside it. If you go to the, if I go to the lower time frame, say on daily time frame, we'll see, check it on also, but you will see that it's the same thing. No? For me, it's more convenient for me to check it on the higher time frame. You see that this move is still the same thing, right? You can see what I'm saying, because price is fractal. Price will always do. Price is always the same. You see that this move is still the same. It's still this within this swing structure, because we have our Fibonacci 2 sitting here. So this is still our swing structure. So I expect price to continue to the upside. All right, I hope I'm communicating. If you go to the 4-hour time frame, you also see it, but somehow I tried that 4-hour time frame, I tried that 1-hour time frame, 30 minutes time frame. It will always mess you up. So what I always do is I'll come to the weekly time frame, or I go to check. If I don't see properly on the daily time frame, I come here to the weekly time frame. So that way you already know the game that institutional traders are playing. You are waiting for them. If you look at GA, let's go to pounds AUD. Pounds AUD is building within this swing structure. Pounds AUD is also building a reversal around there. This is the eye before the main eye. So we already have a strip of this one. So I expect price to transact back. Now the question is, does this work every time? There's no strategy that works every time. That's the truth. But 95% of the time, structural liquidity, will give you, is very accurate. Like I said, I'm already in this trade, so I'll be watching in this week and I'll be posting the progress on the channel, on the Telegram group. How do we combine fundamental analysis with this liquidity? At the end of the day, most times, when it comes to fundamental analysis, for me, I always avoid some news. Like this week now, I'll make sure I close on my trade before FOMC. We have FOMC on Wednesday, and we have NFP, non-farm payroll, on Friday. So you see those type of news, me, I always try to, I'll be out of the market, and that's the truth. Then CPI. But more often than not, no matter what the news said, news is also within the confine of structure. Fundamental news doesn't go outside the confine of structure. It is always within that confine of structure. Amos say, can you buy or sell during the construction or you wait for it to form before? Now, there are two types of traders. Some people will wait. Some people, sometimes, let me tell you what I mean by that. For example, you already know that price has created a sweep, right? And has taken out, we've had a break of structure. So you already know that we have, you have already determined your swing structure, right? So, and you're waiting for price to come and transact inside this zone. So sometimes I do this a lot on the daily time frame. I'll wait for confirmation of, you will have a bearish candle that do this, and then create a sweep. To create a sweep. Now, once I see that sweep above this, I know it's going to transact into this zone. So I'll take a sell. I do that a lot. I'll take a sell. I already know that this is a bullish structure. So what I will do is I'll take a sell from here. But I'll be very careful taking it, because sometimes if you have inducible liquidity, price might not come into this zone directly. Price might just go back up before it gets your 50% retracement. But more often than not, once I take my trade like this, I'll take a sell from here. I'll be my stop loss will be very tight. So I'll ride it all the way down. Sometimes if it comes all the way to this side, I'll take my profit around this zone. All right. And then once I confirm my structural liquidity has been formed, I'll wait again for price to come and take this out. Then I'll take it buy. So this actually requires a lot of patience and a lot of study. So if you are just starting out, I will advise you want to stick with one pair to study this thing. Trust me, once you get this thing, it's going to be like you are printing money, because this is the way institutional traders trade. And that's why a lot of traders will complain that in trading that there's a lot of fake out. There's a lot of fake out. So if there's another, is anybody asking another question? Okay, what time frame is good to find liquidity as it? I prefer daily time frame and weekly time frame for me. Okay, I think I've answered this question also. So now for the giveaway, now this is the deal. I need you guys to, now this is what you're going to do for me, the way you are going to do the assignment, and you have to submit it on the Telegram group. All right. So I need to identify, you need to identify your transactional liquidity and your structural liquidity. Number one, you want to do this. Then you also identify your sweep. There's a sweep. Don't forget we said we have a sweep. Then we have a break of structure, right? So we expect price to transact back. So this become our transactional liquidity right here. Right here becomes this break of structure, becomes our transactional liquidity. So we expect price to transact back into this zone and create structural liquidity. Okay, it creates structural liquidity. So we have our low, this is our low. You can actually identify this on the 4-hour time frame too. You can go to pounds USD, another pair, just look for any pair and identify, you label it. So you label it like this is my structural liquidity. Don't forget we say the last low before the main low is your structural liquidity. The last low before the main low for a bullish structure. For a bearish structure, the last high before the main high is your structural liquidity. Okay. So I need you to identify this on the lower time, on the daily, weekly, or 4-hour time frame. Don't go below 4-hour time frame, because like I said, the 1-hour time frame can be very deceptive. It can be very deceptive sometimes. So you want to avoid unnecessary losses. That's I know people that they've trained their eyes to see it on the lower time frame, but I've tried this so many times and it's always failing. So I just stick to my higher time frame. I'm used to higher time frame. Don't mind me. Yeah, sure, Amos. Yes. Once you identify on the higher time frame, you can go to lower time frame to place your trade. So I need you to go to the time frame, anyone between weekly and 4-hour time frame. You identify, you cannot go to the weekly time frame too. So you label it, you write it, you write structural liquidity. You will see it. Structural liquidity. This is your sweep. So this is our sweep. I don't know what is wrong with this thing today. So this become our sweep. So don't forget, we said that this sweep is our low, the protected low. Okay, so we expect price to do this. Price will now do this and come here and take out the structural liquidity and continue to the upside. All right. So you want to identify your structural liquidity. But before price takes out structural liquidity, don't forget we say from year to year become our swing structure. From this zone, from year to year, from this sweep to this place now becomes our swing structure. So now you are expecting price to transact back, right? So you're expecting price. So you have your Fibonacci 2. So you're expecting price to do this, to come here, either on your Fibonacci 2, 50% retracement, or inside this 50% retracement. Now, let me tell you sometimes what I do. Let's say I'm waiting for a setup, and I already see the structural liquidity, and I'm waiting, and price is taking forever to come into this zone. Sometimes price will not come inside this 50% retracement. Price will tap on your 50% retracement and push to the upside. I think there's one example that I can see. I think I've identified that one on pounds USD. On pounds USD. Okay. I don't know what is wrong with this. So okay, on this sample, we have price, swept this low. Okay, came back and create structural liquidity here, and then do this, and the price took out the structural liquidity, which is what we are expecting. All right. So this one actually came into the 50%. Now, but if you look at this other one, so this become our new swing structure. This place. Let me move this. Let me stop this. Okay, that example I'll include it. So this one right here becomes this low to this high becomes our new swing structure. This low right here, you have to practice this thing before you get it to. This took me a lot of months, weeks, years. So from year to year becomes our new swing structure. So if I put my fib, before we have this breakout, if I cut, where's that thing? If I cut off this place, so you see that price actually came into this 50%. Price came here before price continued the upside. I mean, if you understand liquidity, I mean, from here, you would have made money now. If you take your buy from here, you would have made money. Right? So let me stop recording. I'll drop it on the group.